right, guys, today I'm going to be going over a very important concept called deviations, otherwise referred to as swing failure pattern. A deviation in simple form is just a failed breakout of a range. So when price looks like it's going to be breaking out of a previous swing high and then it fails that level, right? Obviously the opposite will be true for a long position, right? A fake breakout to the downside, bulls are able to step in, keep price back in this range, and we would refer to this move right here as a deviation or a swing failure pattern. So in this video, I'm going to go through some live examples, show you guys how to spot this pattern and how to take a trade off of this pattern. If you guys want to follow my exact trades in real time, as well as to follow the trades of other full-time traders, make sure to click the first link in the description below. So let's jump into it. When you are clearly in an uptrending market, you only want to be looking for deviations of the range lows to continue the trend higher. Opposite is obviously true for a short position, right? If you are in a clear downtrend, look for deviations of the range high to go lower. When you are in an accumulation or sideways market, you can look for deviations of either the highs or the lows. Now, why does this strategy actually work? Well, there's a few reasons for it, okay? Number one, retail traders, when they see price beginning to break out, what do? Okay, they've been taught by other YouTubers to go long. A range breakout to them is bullish. So what they will do is they will long the breakout here, not understanding that this is actually the manipulation move, fake out of the range highs, just for market makers to push price back down into the range. So how do we distinguish whether a breakout of a range is a valid breakout or it's simply a deviation? Well, this is where we need to see displacement, okay? Displacement is this space here on your chart between the breakout point and the current price action. So for example, if I see that price breaks out of a range and there's a clear space in between the breakout point, this is most likely a valid breakout because market makers have already decided that they want to push price to the upside as shown in this bullish move right here. If bears were strong enough to keep price in this range, they would have done it sooner, creating a deviation. So whenever you see this large breakout move here, oftentimes coming into your golden pocket fib or your 0.5 fib, we would refer to this as your discounted zone. That is going to be a valid breakout where you can look to take a retest long of that previous range high and target higher. However, a lot of the times you don't see a valid breakout. Instead, you see a deviation where price is chopping around and then you see that false breakout, but we don't get that displacement move to the upside, right? Creating that large bullish move. You will see something like this where price breaks out and then it fails back into the range. And this is where we want to capitalize on the weakness of this trend and enter a short position as price falls back into that range, targeting those range lows. This would be the deviation move right here or the manipulation move right here. This is where retail will go breakout and retest long, not understanding that this is just a fake out move and not waiting for that further confirmation of price going higher. Okay, obviously the same is going to be true for a long position. So again, you have your ranging market. Price takes out this low. This is where a majority of people get bearish, okay? Whenever I see this formation on my chart, whenever I see price lose a key level, I don't get bearish. I actually lean more bullish and I start to look for long positions on the reclaim of that range low. Again, this would be your deviation move and this would be your long trigger. As soon as price falls back into that range with your invalidation at that most recent swing low, targeting the previous range highs. So this is actually a bullish formation. Even though we lose this low for a short period of time, unless we displace below this low, creating space between the current price action and that breakout point, this is going to be a deviation move. If you do see that confirmed breakdown, then you can look for retests of that previous low because market makers have decided that they want to push price lower, which is shown in this price action. But again, a lot of times you don't see that, and that's where retail traders get faked out. So let's apply this to the current price action here on Bitcoin, and I'll show you guys some examples of deviations and what it will look like. So let's take a look at this all-time high sweep, okay? Very clear deviation here. In fact, this is where we took a short inside of the pro Discord because again, we saw price create an all-time high and then we saw this accumulation, right? Price kind of consolidating. It's not really continuing the trend to the upside. It's not really breaking down to the downside. It's kind of just consolidating up until this point right here where we have a fake breakout of the previous all-time high, but we end up failing that level, right? You can see we don't displace above this all-time high. We don't have a clear breakout to take a retest long. Instead, we come slightly above this high just to fail that high, deviating back into the range and targeting the range lows as your take profit. Again, right, we have the range lows here. You see price comes below these lows and we have a deviation back to the upside. Okay, your entry for this would probably be on a lower time frame. This isn't the best example, but there you have it, right? We sweep the range lows, also a sweep of internal liquidity as well. Bullish momentum, which I will jump into 1 second, why this is crucial for the strategy, and reclaims that range low. There is your long trigger on the 15-minute time frame. Okay, we can even see this play out on Bitcoin's current price action, right? You can see that we had this liquidity level right here that we came right above. And what do you notice about price action here, guys, right? It's not displacing above, right? If we saw a strong breakout, I would look for a long on a retest to continue the trend, but we didn't see that, okay? Instead, we saw a deviation, right? Price failed to hold this high. And as soon as price reclaims back into that range, guys, that is going to be your short trigger with your stop loss targeting these equal lows, right? So you probably still be in this short position. So what does this mean for Bitcoin now? Looking at the Bitcoin chart, we've deviated above this high here. So now we can look for the opposite, right? We can look for a deviation of the local range lows right here. So if we see this move coming into the new week, if we take out these lows and we fail to displace below these lows, I will be looking for a reclaim of these lows as a long trigger, targeting higher prices on Bitcoin, targeting some of these other external highs as my take profit. Okay, this is simply using liquidity levels and fake outs, otherwise known as deviations. Now, how do we make this even more accurate? Well, this is where we use something called bullish and bearish divergences. That's what you see on this oscillator on the bottom of my screen here. Okay, this is my custom coded algorithm for finding hidden momentum shifts in the market. So as you can see here on this deviation move of the previous all-time high, as price was deviating above that high, momentum was making a lower low. Whenever you see price and momentum doing the opposite, for example, price making a higher high and momentum making a lower low, this is referred to as a bearish divergence. Opposite is true for a bullish divergence, right? When price is making a lower low and momentum is making a higher low, this is a bullish formation when price and momentum are doing the opposite. So what you want to look for as price is deviating are these bullish and bearish divergences. Again, you can see here on Bitcoin, right? We had another deviation of this range low here, right? We come right to that level and bulls refuse to let price go any lower as momentum is increasing to the upside. Does this strategy have a 100% win rate? No. Okay, I'll show you guys an example of a trade that failed. This deviation right here, if you entered this long position on another deviation of this range low, this would have been a stop out trade. Okay, a 1 to 2 risk to reward stop out. Again, all you need is 1 or 2 winning trades to make back up 3, 4, 5 losses in a row. Okay, that's why this strategy is so powerful, because you're targeting the opposite end of the range. It usually has a pretty large risk to reward. By combining momentum with these fake out moves gives you a really high probability setup. Again, if we take a look at the most recent Bitcoin deviation here, what do you notice as price is coming up to take out this high? Bearish divergences, confirming in real time on our oscillator on this candle, right? As soon as price deviates this high, your invalidation is going to be at that high. And again, targeting the range lows as your take profit. So you want to be using momentum in confluence with these deviations to give you the highest probability trade. Now, another potential long position I'm looking at on Ethereum using the same strategy is a long down here at around the 4,200 level. Again, we have some equal lows here. We have the local range lows. We're accumulating in this range. So if we sweep these lows here at 4,200, fail to displace lower, meaning we don't see a strong breakdown and retest, but we kind of chop around here below these lows and instantly reclaim, that is going to be my long trigger here on Ethereum with my stop loss at that low, targeting the range highs as my take profit. For more confluence, I'd want to see bullish divergences as well as we're coming down to this level, meaning as price is making that lower low, I'd want to see momentum increasing. Well, guys, that's going to be it for this video. If you guys have found value in this video, make sure to leave a like, comment down in the comment section below. If you guys want access to my own personal trades, as well as to get access to my own custom indicators, like the one I showed you guys in this video, then make sure to click the first link in the description below. Subscribe to the channel for more trading content, and I'll see you guys next video.